Hey everyone, Retire on Dividends here. This was a long time coming. Sorry it took so long to get to this, but Rex Shares came out with another fund finally, right? We all love FEPI, so we were waiting for Rex Shares to come out with another fund, and it did, and it came out with AIPI, which is called Rex AI Equity Premium Income ETF. So what the heck is AIPI? Well, by the name, obviously, it's going to invest in AI stocks and, essentially do the same thing, right? Sell covered calls, do what's expected. This fund incepted June 4th, 2024. So it hasn't been around, that long, depending on when you're watching this video, of course. They do have a fact sheet. Again, fact sheets are always, because a lot of people, let's be real, they don't want to read a prospectus, but fact sheets are really just a quick tool to get some information, and you could see like what it is, what's going on, what their holdings are. But I'm here to, do my normal process, and I'll get right into the prospectus in a second, but I'll just skim through, see what the website has outside of this. So they have a NAV of 53.57. So that's kind of in line with we expect with FEPI. Fund assets 5.3 million already. Actually, let's see how that compares to FEPI. Let's check out their assets. Wow, look at that, 264 million. So yeah, that they got some catching up to do. But in time, I'm sure. This fund just came out. 69 holdings. Wow, that's a lot. All right, so here's their schedule. So their next declaration is July 25th. No June, huh? All right, so let's go to this one. Let's go to FEPI. The next one is June 24th and then July 25th. Okay. So it looks like since they incepted in June, they're not going to actually pay in June. They're going to start in July. So that's interesting. I did not notice that until now. All right, so here's their holdings. I'll get into that in a second. We're going to compare the holdings of AIPI versus, FEPI. But first, as you saw in the beginning, see this here that says Prospectus. This is a document that these funds live and die by, right? These funds have to file a document, and that states basically everything you need to know about the fund. Now, nobody wants to read it. Like I said, it's just a gigantic document of too much. Honestly, though, the Rex Shares prospectus is much easier to read than some of the others. But I'm going to pull it up right now, and I'm going to show you guys at least what I thought was important as it relates to this prospectus. So if you haven't seen a prospectus, again, most of them kind of look the same. I just thought the text and format was a little cleaner for this than some of the others. But yeah, the ticker is AIPI. Again, I highlighted what I think is good to know. And then you guys, I'll save this in my Discord under the prospectus channel. You guys can use this if you want. You can download it yourself and read it yourself, which I would highly recommend, because when you're investing your hard-earned money into something, you need to understand it. You need to like it. You need to be comfortable with it. But I'll do my best to try to explain it so you don't have to do most of it. All right, so here, first off, they always put the investment objective. This is key. Investment objectives are capital appreciation. Notice that's mentioned first, and current income. Okay. Show me the money, baby. Their expense ratio is 0.65%. FEPI is also 0.65%, so that's no surprise. Moving on. All right. It invested 80% of its net assets in securities, okay, comprising of, here's what it invests in, basically, the Beta AI Leaders Select Index. I mean, I've never even heard of that index until now. But basically, there's an index, I guess it's an AI index, and they pick and choose different stocks from that, and that's what they invest in. They seek to employ its investment strategy regardless of whether there are periods of adverse market, economic, or other conditions, and will not seek to take temporary defensive positions during such periods. This is important. A lot of people ask this. What if there's a market downturn? Is there any defensive measures? No. They do what they do no matter what the market condition. So as long as you understand that, then you're fine. All right. If the fund's contracts provide exposure to share price returns, because again, they actually own the underlying stock. They don't do synthetics like the yield max funds. They actually own them. And they provide current income from options. So they own them and then they sell calls on them. So we'll take a look at that too. All right. AI stands for artificial intelligence, in case you didn't know. It's a term that's used to describe computer systems and software programs designed to simulate human intelligence to perform tasks given a set of human-defined objectives. All right, what else here? Let's scroll. There's different types of AI, software, hardware. I didn't really, I don't want to put you guys to sleep, so I'm trying to keep it pretty simple here. And then I guess they have purity leaders and key. I don't know. This part was really confusing, but purity leaders are securities that are ranked based on their trading volumes, and the top 5 are selected for inclusion. Securities within this category are weighted by average daily value traded over the 12 months, subject to a 10% cap. So I guess they do a 40%. This is kind of how they select from the index. They select purity leaders and then key enablers, 40% and 60%. But again, it's kind of confusing. I know it's a bit much if you ask me. You just want to know what the heck are they investing in. The index is rebalanced monthly. I think that's important to know. Okay. As of April 30th, 2024, this index, this Beta AI index, it included 25 companies. So they have 25 companies to choose from. Doesn't mean they're going to pick all of them, right? They're just going to pick and choose what qualifies based on their requirements. So the fund intends to create long exposure to the index by purchasing and holding the stocks, okay? So that's pretty simple. They buy it. They buy the stock. They generate income from options premium by writing or selling, whatever term you want to use, covered call options on the fund's portfolio of securities. So, for example, they'll buy, NVIDIA or whatever the heck that you consider an AI stock, and then they'll sell calls on that same stock. They write call options on approximately 100% of the holdings. So they try to make you income on 100% of what they hold, which this I like, right? Obviously, that leaves no room for full capital appreciation, because remember, when you sell calls, that essentially caps the upside, but it does bring in premium. All right. This is important. They sell calls slightly out of the money, which allows for some capital appreciation. So those two terms are important: slightly out of the money and some capital appreciation. So you have to be okay with that. When you say out of the money, just so you know, call options, these are strike price above the current market price. So when they sell a call out of the money, okay, that means out of the money means above the above the current stock price. All right. An options contract, this is just, I figured in case you guys don't know. An options contract is an agreement between a buyer and a seller that gives the purchaser of the option the right, but not the obligation, to purchase or sell the underlying asset at a specific price, the strike price, within a specific time period, the expiration date. All right. Also, these funds typically write call options within a term of 30 days or less. So they do monthly options. I'm okay with that. Since the fund receives a premium from the purchaser of the option, the fund partially offsets the effect of the price decline in the underlying security. So what does that mean? That means when they sell a call, they'll get a premium, right? But if the market or the fund in particular goes down, since they own the stock, the fund's going to go down. But keep in mind, they got premium. So that premium actually gives it, kind of a little more upside, right? So it's not going to go down fully with the underlying, since they're collecting premium on the way down. Again, but that premium is what you collect in income. They trade on the flexible options exchange, the flex options. What does this mean? I mean, basically it means they have different rules from what you're used to. One of which is they can't get assigned. There is no early assignment because they don't want to get assigned. They want to cash settle before that happens. So I think that's a lot of these funds do that. That's why they use the flex exchange. I'm sure there's other reasons, but I'm not getting into that. Feel free to read through this, though. I'm sure it'll say. I'm skimming through right now all of the different risks. I'm not gonna hold your hand here and tell you, how risky it is. That's for you to look into. I mean, obviously we're covering the basics, but they explain every single risk with these funds because they have to. And it's important you understand these risks, obviously. So, but this is a lot to read, as you can see. So, you as an individual running your own brokerage, you need to understand the risks. All right, so the investment advisor is Rex Advisors. Okay, that's cool, right? The sub-advisor is Vident Asset Management. So, finally a different name, right? It's not Jay running the fund. So that's, it's good to see some diversity of investment advisors and sub-advisors. Here's their names. I never heard of them. Well, obviously I heard of them through FEPI. But Austin Wen, is a portfolio manager of Vident. Rafael Zayas, he is the head of portfolio management and trading of Vident. So, keep those names in mind. You don't see them being interviewed out there. Maybe they don't want to, or maybe they do and they're just not being called on. So someone should interview them, not me. What else? Skimming through. What do we got? All right, flex options, in which the funds may invest in all European-style options that are exercisable only at the expiration date, okay? Again, so this means there's no early expiration, to my point earlier. So that is, again, one of the huge benefits of flex options. Because when you trade options, you could be assigned at any time, which is crazy. So they don't want that, they can't be bothered with that. All right, because they don't want their shares to sell, right? If their shares sell, that's a taxable event, and they're not really interested in that. Sometimes they have to sell to do their monthly allocation to keep it, the weighting properly. So I believe that would be the only time they would either take a loss or a capital gain. But they're not going to let the calls do that. All right, I'm skimming through. Sorry if I'm making you dizzy, but I believe there is maybe something else towards the end I highlighted. I don't know. I can't remember. Oh, creation units. So, guys, when you buy shares, you're not buying it from someone, right? They're making, the shares through creation units. So if more shares are needed, they will create them. That outstanding share number obviously will increase as the fund grows. And there are blocks. So they'll add outstanding shares in blocks of here, as you can see, 25,000, right? That's a creation unit. So they'll add creation units. And you see those on the holdings, right? So most of these funds, they list under the holdings, there's how many creation units they have. So as more people buy into the fund, more outstanding shares are needed. So obviously their block number is 25,000, which, to be honest, that may be the norm for all of these funds. I just haven't really, looked into that. Not like many people care. I mean, I really don't care, to be honest. But I think it's just an important thing to understand, because people always think they're buying from someone. But they're like, what if someone doesn't want to sell? What if no one wants to sell? Well, that's fine. You're buying from the, they're adding shares. So, all right, I think that's it. Let's see. Yep, we made it through 52 pages. See? That was harmless. So what do you guys think? Did I do good on the prospectus? Too much? Too little? Are you awake? I don't know. Hopefully you're awake. All right, so let's get back to the website here. So again, real quick. So if you go to RexShares website, they have the ETFs. They have covered call ETFs, and they have leverage ETFs. I can make a video on the leverage ETFs if you guys want, and we can go through what leverage ETFs they want. But today, obviously, we're just comparing the FEPI, which is the FANG Innovation one, and then the AI one. So now we're going to compare, what makes these funds different, right? So the price is pretty much the same, right? FEPI's obviously been around longer, but which fund is better? Which fund is better for you? Well, lucky for you, I made yet another spreadsheet that will talk about this. So on your left, these are the funds that are in AIPI. So, and we will, side by side, we will pull, let me shrink the column. Yeah, I could probably shrink all the columns. All right, let me zoom in. Okay, let's do that. No, there you go. I don't know. Hopefully the visual's good. I don't know who watches on the phone or the computer. All right, so AIPI, they own Apple. Okay, FEPI owns Apple. That's the same. AIPI owns Adobe. FEPI owns Adobe. Okay. AI owns C3, ticker symbol AI. Okay. FEPI does not own that. That's an AI company specifically. FEPI, I'm sorry, AIPI owns AMD and Amazon. Okay, FEPI owns that. That's, again, keep in mind, a lot of this is overlap. But here we go. Here's three in a row. AIPI owns Arista Networks, ARM Holdings, ASML Holdings. Okay. Don't know most of them. I don't know some of them. They both own Broadcom. Okay, that's overlap. AIPI owns Cadence Design, whoever the hell they are. And then AIPI owns Salesforce, but so does FEPI. Okay, that's overlap. Now, AIPI owns CrowdStrike Holdings and Datadog. Okay, I guess they're good. I don't know. Again, these are maybe companies we never heard. We don't know every single freaking AI company unless they blow up, unless they're like doing really good. But maybe some of these will do good, and that will be awesome for our capital appreciation. Because again, they own the fund, they own the stocks outright. All right, Google. They both own Google. Okay, cool. AIPI owns IBM. FEPI does not. IBM is just just an old fart IT company, but they're still hanging around. All right, they both own, ready for this, Intel, Meta, Microsoft, and Micron Technologies. Okay. But then again, AIPI owns ServiceNow. FEPI does not. They both own NVIDIA. I'm okay with that. NVIDIA's been on a tear, so the more NVIDIA you own, the better. All right, and here's the last four that AIPI has and FEPI does not. And it's Palantir. Okay, that's a volatile one, right? Qualcomm. All right, we know them. Synopsys. All right. And then Taiwan Semiconductor. Okay. But again, if you like these companies, if you like AI companies, then they own many more stocks than FEPI. So they're more diversified. However, you may not even know who these companies are. So you may not be comfortable with that. Or if you're comfortable just being more diversified, maybe you're better off with them. But also keep in mind, AIPI owns everything that FEPI does and more except Netflix, Palo Alto, and Tesla. So the Tesla haters that have FEPI, they may decide, okay, this is my chance. I'm just going to go to AIPI. Or maybe they'll just stop buying FEPI, keep what they have, and then buy AIPI. Me personally, I had no intentions in investing in AIPI, but to be honest, once I saw the amount of holdings they have, and I know nothing about AI, and I don't pretend to, but if they want to do it for me, if they want to choose those stocks for me, I'm okay with that. So I'm probably going to invest in AIPI, and I'm not going to sell my FEPI shares. I'm going to create two positions, one for each. Okay, so now that you know the holdings, what about the distribution, right? What the heck are they going to pay? That's all you care about, right? I want my money. So I decided to do a side-by-side and look at the implied volatility, right? So the ones that you can see, obviously, the ones that AIPI own that FEPI doesn't. All right, look at that. C3, look at that implied volatility, 48%. Look at that. Then they own a bunch, okay, 33%. That's not that great. Then ARM has 66%. Very volatile, which boost up, again, the options premium. Kind of in line, all right. They have some of these AI ones are actually not that volatile, but maybe they'll get more volatile in time. I don't know. But in the end, I did not put probably should put that it is average, right? Average. So this is the average implied volatility. I was expecting AIPI to be much higher than FEPI, to be honest, so I was surprised. But they're both kind of in line. So AIPI's average implied volatility is 33.38%. FEPI is 32.25%. As you know, and we can go to the website, FEPI, they yield, right? It should be right on their website. Where is it? There it is. Their distribution rate is 25.2%. So what is AIPI's? To be honest, it's probably going to be anywhere from 25 to 30%. It's not going to be, I don't think it's going to be above 30. But you never know, man. You never know. Some of these AI companies, man, they could be much more volatile than we think in time. I do not know. Palantir is 39% IV. I would expect a little higher from that. Maybe they're doing better. I don't know. But again, so that's pretty much all I feel like I needed to compare with the two. But in summary, AIPI holds many more holdings than FEPI. Some different. So is it more volatile? Yes, but only by a little. So it's not like you're getting a massive yield, much bigger yield than FEPI. But I do think it will be a better yield than FEPI. So that part, keep that in mind. So, is it good to own both? That's for you to decide. Like I said, I gave my opinion. I'm probably going to own both. I just, I hate making new positions. I really do. I'm trying to minimize that, because again, now that I'm doing my own options, I'm trying to be smart. I don't need to own all of these different positions. I just, but I feel good about FEPI and how FEPI has performed. So I'm going to, right off the bat, I'm going to feel good about AIPI. And I never really wanted to own C3, to be honest, but if it's part of a basket, that's okay, right? That's okay. Again, I own YMAX and it's part of that basket. So why the hell not be part of the AIPI basket? I'm good with that. So yeah, in time I will own both, and it'll be I think it'll be a good performer. But anyway, that is the video. That's the summary of AIPI. I hope this helped you guys out. I hope it worked. I hope it helped, and maybe guided you towards making a decision, one or the other. But keep in mind, guys, this is not financial advice. I am not a financial advisor. This video is for fun and entertainment. So hopefully you had fun. Hopefully you were entertained. If not, let me know. I'll try harder next time. We can only be so entertaining in the investment industry. We're just looking at numbers all day. But again, it's all about what fund works best for you based on your particular situation. You can't base what other people are doing, to what you're doing. So again, AIPI, it's a brand new fund. You may want to wait for that distribution. So, we'll see. But again, it looks like their first distribution is not till July 25th. Their first declaration. Wow, that's a long time. Maybe because they don't want people to be upset. If they come out in June, right, that's not a full month. People are automatically going to think, oh, their yield is low, But instead, their first month's going to be like, boom. They're going to yield probably more than 30% in the first month because they have over a month and a half of now, buying and doing options. So that first month, boy, it's going to be pretty sweet. But anyway, guys, like I said, not financial advice. Please do your own research. Please read the prospectus. Please go through the website. You have to. It's your money. You work hard for it. Don't base your information on a YouTube, right? YouTube is just supposed to help you, right? For those of you that hate reading, that's what, to me, at least YouTube is for. Just listen, okay? All right. Plus, it's good to hear other people's opinions. Like, what do they think? What is this? What is that? But anyway, hopefully this helped, even if it's a little bit. If it helped a little bit, then that's good. That's a win, right? But let me know what you guys think down in the comments. Are you going to buy, or maybe you bought, or did you buy AIPI already just because of FEPI and you trust Rec shares? Or are you going to buy AIPI at some point? And if not, why are you not going to buy AIPI? And then the next question is, will you own both AIPI? I hate saying AIPI. I wish they came up with a different name. But are you going to own both? I'm going to have to come up with like AP. How about AP? Are you going to own both AP and FEPI, right? Or are you going to own one? And if so, why? Anyway, lots of questions, but you can put in the comments or you can join the Discord, come to the Rec Shares channel, and let's talk about it, okay? Let's talk about their funds. Are you impressed? I know they're going to come out with more funds, by the way, guys. So keep that in mind. So they're coming. It's just a matter of what you want. What do you want in your portfolio? All right. So that's it. That's all I got for today. Again, if you enjoyed this video, please hit the like button. It's greatly appreciated. It helps out the channel. And if you want to help it out even more, please share this video with your family, friends, or other investment channels that you may join. Not channels, groups or whatever. To help people out and learn these, the different funds. All right, guys, that's all I got for today. But I hope you, like I said, hope you enjoyed this video. Any questions, leave in the comments below, and I will talk to you later.